Are you that optimistic that we can avoid a recession?
I think when we think about the growth outlook, I think we are seeing signs of a slowdown. But yes, we are not forecasting a recession in our projections as of yet. But we believe that the slowdown in itself is important, because that will keep the back-end treasury yields under pressure. And some of the rates volatility that we have seen recently, we believe that the peak in treasury yields may already be behind us.
That was going to be my question. Have we seen a peak in yield? So with the aggressive Fed, and we know that these 50 basis point hikes have been priced in, where do you then see some opportunity?
So I think one thing, when we think about the Fed policy outlook and treasury yields, one key development that we are following is the decline in long-end inflation expectations in the US. If you look at 10-year or 5-year inflation break-evens, back in March or April, it appeared that they were breaking to new highs and leading to concerns about de-anchoring of inflation expectations. But now they have declined again, and they are down almost 40 basis points from the highs. We believe that that is a sort of a recipe for a peak in treasury yields and a peak in rates volatility. In fact, we are forecasting 10-year treasury yields to go down to as much as 2.25% by the end of the year.
Mayank, I want to just dovetail to what's been going on with China and the price action on the yuan. What does it reflect for the macro picture? What is baked into it, in other words, is what I'm trying to get to?
Sure. So, one thing of note is, China is obviously still facing some challenges on the COVID front, with the still, yes, we are seeing some lockdowns in cities, etc. But at the same time, it appears that China risk sentiment is starting to bottom, and we are seeing more signs of policy support for growth via, LPR, loan prime rate cuts, steps to boost mortgage demand and broader consumer demand. And, also looks like, greater policy support for some of the beleaguered sectors like the internet economy and the real estate. So, as the China risk sentiment is bottoming, we are also seeing capital flows come back into China equities. And I think all that is reflected in CNY recovering some ground here. We think that dollar CNY can decline as far as 6.6 in the short term.
Well, then, we had this $21 billion in additional tax rebates and 300 billion yuan in railway construction bonds. How much does that all move the dial, Mayank, for you? And tell me also about how China then perhaps gets out of the hole it's in currently because of COVID lockdowns and the like.
Sure. So I think, the policy support measures that we are hearing about, those are encouraging. The challenges that, some of these policy support measures would still not be able to transmit as well if the economy is still under lockdown, right? So in fact, when we think about our growth outlook for China, we are forecasting a much better growth outlook for the latter half of the year. In the second half, as the economy reopens up, some of that investment measures that have been announced, that will flow through and boost growth in a much more significant manner. And that's when, we also expect China proxies, the likes of Aussie dollar, to do much better.
I'm going to ask you as well. You keep taking my questions from me before I can get to them. The Aussie dollar is one of your top calls, but you're short US dollar. Tell us why.
So on the US dollar front, in the last few days, we have seen US dollar retreating from elevated levels, both as the support from the yield differential is starting to fade as US Treasury yields are coming lower, but also as the risk sentiment is stabilizing, right? And that reduces the safe haven demand for the dollar, right? So both these dynamics together, as I was highlighting earlier, right, the decline in long-term inflation expectations is key for us. So we think that, dollar has more downside. Especially on the Aussie dollar, that is one of our top pick in G10FX. We think that, currency is one of the cheapest in G10 universe right now. And as I was saying, right, as China reopens and relies on the investment channel to support growth, it would be, Aussie would be the key beneficiary as its key commodity exports are boosted.
You talked about China before, but I do want to just ask you the MLive Pulse question that we're asking everyone, specifically whether or not we can see China stocks outperform. Has there been enough of this bad news priced in?
So, I mean, I'm not an equity analyst,
Yeah.
but it's still, we believe that, yes, when we see the relative performance of global equities, then it is true that China equities have underperformed a lot and have also seen significant outflows, right? So now that, we are seeing risk sentiment bottoming, as I was saying earlier, we are starting to see some signs of flows coming back to China equities, and that's a positive sign for us.
Mayank, one very, very quick question. Who's likely to have the strongest currency in your region? Very quickly.
So in the G10 space, I would say Aussie dollar is our top pick. In Asia, the outlook is more challenging, especially for some of the currencies in South Asia. But I would say in North Asia, the likes of Korean won, they have, again, underperformed a lot, look cheap on valuations. If China risk sentiment is stabilizing, then we see room for some recovery there.